Hello, everyone. I hope you're all having great days. And with this webinar, I'm sure they're only going to get better because I have the pleasure of welcoming you to this webinar on the future of insurance, achieving digital excellence in a consumer-centric world. My name is David Cooper. You can call me Deco. I'm the marketing manager here at Fountain, and I want to kick off by iterating the findings of J.D. Power's insurance report that found that for the first time in 21 years, websites have surpassed humans in importance to client interaction and services. And this just goes to show how digital activity is becoming more and more influential in the channel mix. So today, you've got the lucky chance to see some unique insights into this sector and also take away some practical actions with you. Our speakers will delve into your audience, your customers, how they're behaving differently, and what you can do to react to this new activity that they're seeing. So what I'll do now is just give some brief oversight over to who our speakers are, and then I'll pass over to them. So they're both from two highly respected companies in each of their fields. First up, from multi-award winning customer experience and insight service Feefo, we'll have business development manager Antonio Genziani, who has a background in working with new businesses to develop their customer experience. Then next up, from global award-winning digital marketing agency Fountain, we have Rachel Murray, head of partnerships, who is passionate about driving bottom line growth for business owners with a background in sales and marketing for both B2B and B2C. So, seeing as intros are done, I'll shut up now and I'll pass over to Antonio. So take it away, Antonio.
Thanks very much, David. Morning, everyone. Thanks very much for being here. So introductions, as you say, out of the way, let's jump straight into it. So I think we can all agree, no industry, to be fair, has been unaffected by the events of this year, and it's really put some aspects of consumer spending in sharp focus, and the digital acceleration, as David mentioned there, is definitely the case, particularly with those sectors we found that have relied on or advocated face-to-face contact, so finance, property, automotive, recruitment. And so in terms of the agenda today, what I'm keen to talk about is how some of this has impacted the insurance sector. And despite the recent upheaval, actually a lot of what we're going to talk about are things that I have seen and my colleagues have seen during the time that we've worked with Feefo. I've been with the company nearly 6 years now. And it's something that we've advocated throughout that period in terms of best practice. So really now is a better time than ever to embrace what engaging with customers has to offer for your business. And if you're doing it already, how you can enhance that strategy further. So just to give some background, you can see here, this is from a recent YouGov poll, I believe, in terms of perception of the sector. And understandably, it is quite low. And to be completely candid, insurance is one of those products that we have to purchase either as a necessity, so car insurance for legal reasons, or it's purchased out of fear or worry with what could go wrong, such as pet insurance. So the industry typically is seen as something that generates revenue from either necessity or fear. We don't have much control of it. And if we make the wrong decision, it can prove very costly, as I found out by not having pet insurance for my cat and running up a £3,000 veterinary bill. So I can attest to the need to having insurance. But you should expect every customer really to be skeptical about you as a result. And this is something I think that the pandemic has exacerbated. I was just reading in the FT today about the ongoing legal disputes with small businesses and the unprecedented number of claims that have been made in that industry and the fallout from this. And this sort of reaction, I think, has a sort of systemic distrust then for other aspects of insurance. So if those customers, those business owners are buying travel insurance, car insurance, the feeling that they've got from that experience, maybe with the small business policy that they've got, will then feed into their opinions when purchasing those other products too. and it's that idea of, are you going to be for them if they need to claim, really. And you really need to work hard to build their trust with that customer. And what I'm here to explain really is how feedback can help you build that trust early on in the relationship, even before they've actually purchased the policy, and throughout their lifetime with you as a customer. So again, to David's point before, 41% of consumers are likely to switch provider due to lack of digital capabilities. And really, the main point of that is that the acceleration of digital has put companies' proficiencies in this area in really sharp focus. We've seen companies like Lint, for example, had to set up a web shop within 5 days in order to sell Easter eggs in time for their business. So if you can react quickly enough, you can take advantage of it. But you really have to put the gas on to get into that if you haven't done so already. And as a result, essentially, as a Deloitte article recently put, customers are the disruptive force in the insurance industry, and as I've said, in other sectors as well. And a lot of I think the concerns that we've seen through 2020, there's kind of three key aspects: price, sort of digital opportunities, and customer experience. So the financial strain of the pandemic has put a real emphasis on reevaluation of all people's outgoings in their house, and price is becoming ever more critical than ever. And this follows a lot of consumer trends that we're seeing in other sectors as well. One that stood out for me in particular was in the travel sector. So money saving experts surveyed a number of customers in the summer to understand their perception of the travel agency or property rental company that they used. And the results basically showed that, good or bad, customers will remember how they've been treated by companies during the pandemic. And the point is really that the company, then your reputation in a digital age, are front and center of a customer's experience with you, because there is no element now of sort of business trading hours being offline, your store being shut. It's always there. Even if you aren't transacting, your brand is there for people to see on your website and online in various channels. And so new and existing clients are always going to be looking to see what the perception is of you as a business. So making sure that that's really as good as it can be, it puts you in really good stead to help meet those expectations. And again, in terms of 2020 and COVID, I think there's a number of different areas that have brought these sorts of opinions into sharp focus. The idea of social responsibility, I think, is a really interesting one. We've seen with Admiral paying back its policyholders for not using their vehicles during the first lockdown. Those little sort of initiatives can go a long way in making people feel that they're wanted. And in some ways, it may have an impact that they then start questioning you to say, well, I've seen Admiral doing this, what are you going to do? So having that sort of element there, I think, within your toolkit can really help as well. And the other thing I think that's really critical, as I've just mentioned, is that customers will only be really aware of what you present to them as a business. So if they can't find the information that they're looking for, they will begrudgingly go and look for it elsewhere. So being up to date in an advisory content, having that authoritative position will really help. And the more the niche a product is or a service is that a customer wants to buy, which insurance certainly is, the more likely customers will be looking for that content. And I mean, to give you some context, Feefo works with insurance companies that underwrite anything from your prized road bike that's £1,500 to a £100 million classic car collection. So regardless of what that person is or the monetary value, it is still a valuable asset to that customer. And so they want to know who meets their needs best. And those specific elements of the content that they're looking for, you, where possible, you should look to provide, because the risk here is that you place the customer in a forum, in the wider sense of the word, that you cannot control, and they may have to go and look for that information elsewhere that might not give a true reflection of the services and products that you offer. So social media, Google, forums themselves, and it might actually be factually incorrect, which could have a damaging impact on customers' perceptions of your products when they come to purchase them. So what we can now look at is essentially how we can how we can work to support that. And actually, just to give you some examples of that, you can see here in this recent YouGov poll from upticks in customers that have purchased, Admiral is right up there, and I think that's a good case in point in that payback of policies. Incidentally, AXA is a client that we currently partner with at Feefo, and we'll be talking a bit later on about how they use our platform in practice as well. So what we look to do within the platform is advocate the idea that a customer journey is multifaceted, and you can really stand to gain from having a slightly more lateral approach to looking at customer touch points to ask for feedback. So I think often I find within the insurance sector, the perception is that you ask for feedback purely on the people that have engaged with you or have purchased your products or services. But what we always recommend is the idea of engaging with and learning from those people who have not purchased from you can be just as much value to the business. And you can't really improve your entire customer journey if you're aiming to do so if you don't get feedback on it. If you're trying to improve win rates on quotes and just asking people who signed up, you don't find out from the people who didn't why they didn't. So with a tool like Feefo's Campaign Manager, what we enable insurance companies and various other sectors to do is to run multiple feedback campaigns. So for example, as I said, it could be someone who's asked for a quote. They may have inquired and not made contact after a certain period, or they've lapsed after asking for a quote for a certain period. What this can actually then help to do is help you understand the areas that you're achieving well in and the areas that you could look to improve. And we have actually found with some clients in other sectors that the loss of potential business or understanding that feedback at a quote stage is actually of more value to the organization than the feedback that they are showing from successful customers and putting on the website, which, as I said, 9 times out of 10 was the original reason that they looked to be collecting feedback, not only through Feefo, but through other platforms as well. So, as I said, the idea of not just focusing on the end to collect that feedback, I think is really critical, and just focusing on the most positive sentiment. I think if you look at everything, that's the really key benefit here to consider. So it's much like buying a new car, buying broadband, or a holiday. The honeymoon period of the purchase itself shouldn't really be the time that you're asking for feedback. If somebody asks what your holiday experience was if you went to Corfu, telling them how the booking experience was on EasyJet is not actually showing them how the holiday was. So that idea of doing your feedback when you've made your booking and then when you've come back from your holiday, it's the exact same principle in terms of insurance. So if we look at new business, claims, renewals, lost business, all those different aspects, you get a much rounder representation of what those customers are looking to feed back to you. The other thing I think that we would recommend is that idea of demonstrating great customer service wherever possible. So what you can also look to do with those campaigns is tailor the messaging to support the tone of that touch point in question. So for example, a claim for a pet insurance policy is far more sensitive a subject than actually purchasing the policy itself. And you can build that idea of authority and trust, which we mentioned at the beginning, by looking after your customers in the right way. And that sort of ability to change those campaigns you're sending out, I think, are really useful. And changing that messaging also to mirror what's going on in the world at the time. So, for example, if we're looking at travel insurance, your messaging may want to reflect the introduction of travel corridors and where those change. You might want to change your messaging to suit that. Now, if you've got a system that doesn't enable you to do that, or your messaging is only focused on one point, you might then look slightly out of touch with your customers. Or if you're trying to cover a number of different touch points and you don't have that flexibility to do so, you have to keep your messaging quite broad to have that one size fits all approach. So by having those tailored touch points and being able to tailor those yourself, it just, again, gives you that idea of authority, and again, builds that idea of quality and quantity of content. And ultimately, the idea of being transparent with that feedback as well, I think, is really useful. So I would hazard a guess that a number of the reasons why companies have not always looked to collect feedback on some of those other touch points, particularly claims, could be a nervousness about wanting to have that content shown publicly, because of the nature of that touch point. It might not always make for easy reading for a customer, but it could actually be really critical for helping them to convert in buying a policy for you, because that, as we said, is the moment of truth. So I've got a couple of examples here from existing customers of ours, bought by many, challenger insurance brand, and then a very well-established insurance house in AXA, just to show some of these ideas of best practice and how they can help support that. So when surveyed in the Deloitte example we mentioned earlier, 36% of insurers said that a lack of leadership knowledge and or support for technology adoption had been a major challenge in the transformation of their business. But a strategy where the leadership team can take an active approach and help to drive a positive attitude within the business is the one that is really going to help bring the best results. And from my own personal experience, and I'm sure from others on the call today, when you have that leadership team take an active approach and the adoption of what you're trying to do is seen not just within your department but across the business, it can have a really positive impact. And this example here with Bought by Many and the comments here from Stephen Mendel, their chief executive, really are a testament to that. And they use reviews not only to recognize great customer service and to show that to their customers, they also use that content internally to recognize the achievements of their staff as well. So again, the idea of not just using feedback to promote your business to others, but to also feed that back internally and show the great results that you're seeing as well. And then the other example, as I said, was with AXA. So I think showing this in practice and having that multi-touch point approach is really useful. So you can see here what they're enabling customers to do is to look at feedback by the product, the time frame, the service, and the sales channel as well. So if you want a very granular insight into all of the 5-star reviews over the past year from car insurance claims made online, you could see that, and that level of granularity is really helpful for customers. And where people are actively encouraged to shop around for alternative providers in a number of sectors now, not just insurance, but other financial services and utilities, broadband, showing feedback from customers, again, from new business as well as renewals, will help support that retention, because people who are looking to renew with you for the first time can see what the experience was from others that have recently had that. And the other thing that I wanted to sort of say within this as well, I think, was that where you can see within other sectors like the banking sector, for example, the CMA has actively got those banks collecting feedback across specific touch points, and they are showing that information to the public, and that industry standard is there. Now, if the insurance sector is not necessarily moving in the same direction or is not looking to standardize that questioning, the businesses really should then take a lead in trying to ask for that information itself. And it's a way of helping to differentiate yourself. And actually, if other companies then start to do the same, you create that broad metric that customers can use to report on and in their opinion, and find out how you're performing as a business. So all of this can really help, as I say, to set you apart, but also show where you stack up with others within your sector. So the other thing that is also useful, you've got all of this feedback coming through, but what are you actually going to do with it? So the idea of learning from your customers, as we've just said, is really useful as well. And looking at providing those multiple touch points obviously gives you a lot more detail. The impact of that is that you have more content then to manage and analyze. And there may well be companies that have dedicated teams to do this. They may use their own systems to do this. But actually, where you can automate things as much as possible, it will make your life easier. So what we do at Feefo is we enable customers to do this through our AI reporting capabilities. So what you can look to do is identify those areas of the business that you may want to promote based on the feedback that's coming through, areas that you might want to monitor that could go either way in terms of a positive change or an issue, and then those pain points that really you should focus on as well. And what this ultimately will enable you to do through these sorts of reports that you would put together in your business is understand, is that feedback giving me the clarity that I need because I know there's a pain point, now I've got the data to back it up, or is it bringing things to my attention that I haven't considered at all before and that I need to find out. And the idea of sort of reporting and responding to that feedback, understanding what your customers are saying, both positive and negative, I should say, demonstrates that you are listening to your customers and you're promoting that the changes that are made within the business that they are taking place, and actually that can reinforce the idea to the customer that their feedback does actually mean something. And a really good example of this is with one of our clients several years ago, actually used the data they'd collected through Feefo to identify that customers wanted to talk to them outside of business hours, so later in the evening and on the weekend, but they didn't have the facilities at the time to enable that. Obviously, with digital, this will have changed somewhat, but what they did at that point was that they chose to increase their call center hours for later in the working day and open on a Sunday as well to meet those needs. So again, that idea of practicing what you preach, really, rather than just using reviews as testimonials, using reviews as what they are, feedback, and actually learning from your customers as a result. Despite all of this, I should say, actually, it makes it sound like there's a number of things that people should be focusing on in changing in their business. The average retention rate within the industry is 84%, which is particularly high. So obviously that is a great accolade to the sector in terms of how things operate. But equally, 76% of customers are likely to switch provider after a bad experience. And we've seen before with those small business examples, I wouldn't be surprised if a number of those look to change their insurer at the point of renewal because of what's happened in 2020. So that idea again of trying to mitigate those bad experiences is really critical, because obviously it will affect your bottom line as a result. So just some final points that we think would be worth sharing with those on the call today in terms of best practice. One of those which I think is really useful is to focus on the emotional as well as the practical side of things within insurance. So making a claim for a burglary or a car crash, those experiences themselves are pretty traumatic. So whilst there's a practical side to making the claim, so the client providing their evidence of what's happened, documentation, you should make sure that you're having a caring yet efficient service, which sounds a bit of a contradiction, but the idea of doing things in an efficient way but being empathetic to that customer, it really goes a long way to making feel that you're taking the reins on the situation that they're in, and that you are looking after them both in an emotional sense, but also just really making sure that everything's done efficiently. And collecting feedback after somebody has completed that claims process, I should say, is really vital to helping you to improve the process for future customers. So you can then showcase that feedback to new and existing customers up for renewal, again, that you deliver on what you promise, and that moment of truth, the customer expectation is being met. The other thing to say also is that customers respond to user-generated content very well. So according to a Nielsen Consumer Trend Index, 92% of consumers trust organic user-generated content more than they trust advertising. And I think within insurance, one of the best examples is always pet insurance. So Pet Plan and various other companies will actively ask for customers to upload videos or pictures of their pets. Now, that could be done at the claim stage or when you buy your policy, but if a customer shows a video testimonial of their dog after surgery running around the park chasing a ball, that sells the idea of what that cover could do to you, more than just potentially the ins and outs of a static image or something like that. So again, just another little thing to consider. It doesn't always have to be factual, informative in terms of the feedback you get. You can have an element of fun, I guess, within reason within that as well. And just going back onto that idea of gauging with customers and trying to resolve the issues, if they have left that feedback, and try and resolve it, and where possible, provide the opportunity for them to change that feedback. So what we do within Feefo is when a customer leaves a review, a business can go back and respond to that, and the customer does actually have the option to respond to that feedback and change their rating if they want to, and other customers can see that as well. So there's definite benefits to doing that in terms of SEO. It generates more content on your pages when they're integrated. If you're going back to positive and negative customers, even more so. But ultimately, if the customer's changing their rating, it will improve your overall scores and shows that you have taken the time to resolve those issues. Where you may want to look at collecting feedback in a private capacity and have just the insight but not use that content publicly, Feefo enables customers to use surveys as well. And I think surveys is a great option to consider if you're not doing that currently. And you can see this example here with the AA. The idea of collecting that private anonymous feedback encourages customers to just be more open with you. They might have decided to be less candid if they felt that the feedback was going to be public or read by others. And other tools like social listening as well. So platforms like Hootsuite, if you're wanting to listen into people's opinions online through social media and forums, it's a great way to sort of be on a fly on the wall, as it were, and see what people are saying about your brand, but in a way that's unprompted. And ultimately, all of these elements, I think, are really critical. The customer insight part should be really seen as a key component in influencing how you change as a business and influencing retention as well as winning new business as well. And I think a great case of point of this is with Heath Crawford. So this is a recent case study that we did with them, where using the content that they'd collected through Feefo actually helped them to achieve a 94% retention rate, so 10% higher than the industry average. And actually shows, again, that idea of putting the proof in the pudding and having that content displayed to your customers really can help pay dividends. So just some key takeaways, I guess, in terms of what we've gone through today. So we've already said this at the beginning, David said it before, customers have more influence now than ever. The acceleration of digital has really shown that businesses need to step up to the plate in order to get that message across that they can meet that customer's needs in any capacity. You stand to gain more from engaging and learning from your customers across the entire journey, as I said, not just focusing on the part that you think could provide the best PR, so your new business feedback, but really focusing across that whole journey to get that message across. And using feedback from customers to learn where to promote and improve those respective pros and cons of your retention strategy. So understanding where you might be falling down, how you can improve that, understanding what's going well and looking to promote that as well, I think is really key. And all of them, as we've said, are kind of intertwined with one another, but by engaging with the customer across all of those touch points, ultimately everyone as a consumer and the business stands to gain, because it's not siloed, and it means that everyone stands to understand what's going on from those customers and can achieve the best that they can in what they're selling. So yeah, everyone, thanks very much for taking the time, as I say, to listen to what I have to say. I'll hand back over to David and to Rachel.
Brilliant. Thank you very much, Antonio. Some great insights there and a really good look into how the audience of insurance is becoming more digitized. So next up, we've got Rachel from Fountain. And Rachel, I'll just pass straight on over to you.
Thank you, David. So good morning, everyone. It's still the morning. It is. That's good. So as David mentioned, I'm head of partnerships at Fountain. So let's jump straight in. So whether at a time of crisis or stability, insurance is fundamentally about protection. So with that in mind, it should come as little surprise that insurers have seen an enormous increase in customer contact during the pandemic. But manpower is stretched, employees are working from home, and the in-person channel is limited. As a result, insurers have catapulted themselves into digital transformation. Companies have launched digital forms, virtual inspections, video conferencing, and of course started to focus more on their online presence and digital marketing efforts. But this new landscape isn't without its difficulties, as we all know. A seamless customer experience is more important than ever. Consumers are now expecting a tailored, efficient, and transparent digital process. So having worked with a number of insurance companies and spoken to your colleagues in the industry, I want to discuss solutions to the three most pressing problems that insurers have raised with us. Number one, improving lead quality and identifying and generating more profitable customers. Of course, this was relevant pre-2020, but it's even more important at a time when searches and cost per clicks for the insurance-related keywords are particularly high. Imagine if you could significantly increase revenue and reduce wasted media spend by accurate tracking and the latest optimization tactics. I'll be outlining our approach to this today. And number two, evoking trust in your brand and maximizing customer lifetime value. I'll be discussing tips to ensure that you're the most trusted voice in the industry during a time of uncertainty. I'll also be outlining a low-cost, high-impact method to help you stay front of mind with your customers in a positive way during their ever-changing life circumstances. And last but not least, standing out and taking market share on your new and existing products. How do you get ahead of the competition through advanced website optimization tactics? I'll be outlining a strategy which generated a 73% uplift in on-site conversion rate and a 45% reduction in cost per lead for a well-known UK health insurance broker. So let's start with issue number 1, improving lead quality and identifying and generating more profitable customers. Google Ads cost per clicks for the insurance and finance industries are well known to be high. So this little sample of popular insurance keywords have an average cost per click of £15.39. Now that is quite high. I know a few of you in the audience are healthcare insurance providers, and as to be expected at the moment, healthcare insurance related keywords are very competitive. So we're often seeing cost per clicks of £50 plus, which is crazy. With cost per clicks as high as this, it's vital that you're targeting the right audience and that lead quality is, well, exceptional, I'd say. The best way to achieve this is by finding out where your most profitable customers are coming from, so you can invest more time and resource into that area to generate more of them. So, how do you do this? According to HubSpot's 2020 statistics, only 75% of marketeers are reporting on how their campaigns are directly influencing revenue. Shocking, I know. So don't be that 25% that waste their money. It's vital that you take a full funnel approach to your digital efforts and track and optimize each stage of the sales and marketing funnel, from initial website interaction all the way through to lifetime value and brand advocate. So to do this, you need to ensure that before you get to this traffic stage, all goal tracking and attribution is set up correctly so that your marketing data is being recorded reliably and accurately. Now, I know you're seasoned marketeers, and a few of you most definitely are, because I've done my research. A lot of you guys will already have this covered, but you'd be surprised at just how many insurance brands haven't set this up properly, or they just focus purely on lead volume over profitability, which is a mistake. So these are the 2 vital things that you need to do to set up your tracking correctly. So number 1, ensure you have accurate UTM tracking. Simple as that. A UTM code is a snippet of simple code that you can add to the end of a URL to track performance of campaigns and content. Most advertising platforms will give the option to add dynamic tracking templates to avoid manual input, thank goodness, because that takes a very long time to do. And doing this correctly allows you to begin to dig into your sales funnel to understand which audiences and targeting are generating the highest return on investment. And number 2, collecting the unique ad identifiers for offline conversion data. So for those users that don't complete the transaction online or need a little nudge from the sales team, you should use offline conversion tracking by collecting the unique ad identifiers, such as GCLIDs, short for Google Click Identifiers for those who haven't heard of them. So this is a unique tracking parameter that you can import back into the advertising platform to indicate a transaction has been completed offline. So this closes the net on your sales data and allows in-platform profitability analysis down to a keyword level. So once you see which keywords are bringing you the highest lifetime value customers, you can regularly run an 80-20 analysis. Of course, the Pareto principle states that for many events, roughly 80% of the effects come from 20% of the causes. And this applies particularly to keywords, as a small number of top performing keywords will achieve the greatest returns. I'd recommend creating separate campaigns for these high performing keywords. This gives you a greater level of control. Also, make sure you're writing ads specifically for each ad group within those campaigns. Make it really tailored. And of course, continue to test ad copy to increase those click-through rates ongoing. Another great way to improve lead quality is by getting smarter with your audience targeting. An example could be that your analysis might flag that, say, millennial women who live in households with children are most likely to become long-term policy holders. Whatever your findings, detailed demographic targeting is a must, but there's plenty of other audience targeting options to choose from to ensure you're reaching more profitable customers. So here are a few examples. Let's start with affinity targeting. So through this, you can reach users based on what they're passionate about, their habits, and what they're showing their interests are online. In market audiences, you can reach users who are in the market for your offering. Of course, these have particularly high conversion rates. Life events. So you can target users when they're in the midst of important life milestones, whether that's, say, be moving house, just had a child. This one is particularly important for those in the insurance sector. And last but not least, similar audiences. You can reach new users with similar interests to your existing customers. So you've identified your most profitable audience and you've tailored your campaigns accordingly. Now it's time to address issue number 2, evoking trust in your brand and maximising customer lifetime value. Would your customers say that you're the most trusted voice in the industry? What are the emotions that come up from them when they think of your brand? According to a recent study by YouGov, 68% of policyholders believe that providers will do whatever they can to avoid paying out in the event of a legitimate claim. The insurance industry, as we know, isn't always trusted, and during a time of instability, it's vital that your brand differentiates in order to retain your current customers. Appropriate messaging online is vital. We all know this. The in-person channel has been limited, so your digital efforts need to clearly demonstrate that your customers' needs are met and understood. Here are a few suggestions that we've seen work really well for our clients. Price and correct amount of cover needs to be completely transparent. People at the moment particularly are cost sensitive and often time poor. They need to easily understand what level of cover is required and why they should pay, what this costs. Travel insurance particularly, sorry to pick on you guys, I know there's a couple of you in here today, is a minefield in this area at the moment. The cheapest amount of cover is presented and various exclusions are hidden in hefty policy documents. Users are dropping out of the process because they can't find the answers they're looking for. Benefits need to be clearly demonstrated in the quote journey, concerns answered, and the final price needs to be presented in as few steps as possible. Jargon. So make sure you eliminate that confusing jargon. Your customers are not insurance experts, so you're going to give them a jargon-heavy quote journey, then they're going to leave. So use asterisks and clear info links if you must include it. I think, as Antonia said earlier, show empathy through your communication. Act like and show that you care. That is more important than ever before right now. Another important one right now is set, manage and meet expectations. Let the customer know when they're going to expect to hear from you. And if there's going to be delays, which there might very well be, tell them why. And last but not least, personalisation. Avoid a one-size-fits-all approach and instead focus on the customer's specific circumstances. We find that generic content that looks like it's been artificially written leads to drastically lower conversion rates. Now, it's vital that all of these communication tips are applied to your advertising efforts, especially for remarketing. With free impressions and clicks as low as 10 pence, which is very important at a time that cost per clicks are through the roof, remarketing is a really cost-effective channel for maximising conversions and keeping your brand front of mind in a positive way. So remarketing works by creating a list of visitors who have been to a certain page on a website. It's often used to show people ads about the product they were viewing to encourage them to return and complete an action. In this case, sign up and go through the quote journey. It also creates an excellent opportunity to increase the lifetime value of existing customers by moving them along from one product funnel to another. Now, this is very important for the insurance sector, where an insurer may have several products that become relevant to a customer at different stages of their life journey. Now, you can set up remarketing on all of the channels, as you can see on the screen, Google Ads, Display and Search, Microsoft Ads, and all of the social channels. Most importantly, remarketing can also be used as a way to introduce existing customers and users who have not converted to other products to make them aware of other products that may become relevant to them in the future. Now, this is especially effective if you have a wealth of high quality content that addresses the potential concerns of your customers. So consider at which point each of your products become relevant to your target audience and build out a strategy accordingly, like the simple example shown on the screen here. So advertisers can specify whether remarketing lists should collect users from product pages on their website, informational content such as blog posts, or both, providing it's all highly relevant to in the ads and to the users being shown them. So last but not least, it's time to address issue number 3, standing out and taking market share on your new and existing products. Messaging is obviously vital here, but there are other ways to stand out in such a competitive market. If you're sending traffic to your website, it's important that you continue to improve your conversion rate on site. A recent study by McKinsey summarised the value of insurers investing in Crow and UX perfectly. They explained that a higher online conversion rate translates into real money. They found that an auto insurer with 10 billion in annual premium income can generate 400 million in additional premiums by boosting its online conversion rate by 20%. Now, that kind of value state gives insurers a powerful incentive to close the digital capabilities gap that separates them from the top performers. Now, I know some members of the audience today are already implementing conversion rate optimization. I've had a look at your tags and I've seen that you've already got split testing software on there as well as user recording software. But I imagine a few of you are locked into legacy tech and would like to see some options. So here's a quick outline of our approach. Firstly, we review the current user behavior on the website in Google Analytics and other tracking platforms, as well as putting user recording software on the site. Now, Hotjar is easily the best tool for user recording if you haven't got it already, but you can also use others such as SessionCam. We use Hotjar's recording data, heat maps and surveys to see where the users are going, what they're having trouble with, if they're missing key bits of info, and most importantly, why they're not converting. So using this data, we then create a bespoke testing roadmap, which highlights test ideas that aim to improve the user experience and increase goal completions. And finally, we A/B split test using software such as Visual Website Optimizer or Google Optimize to increase conversion on an ongoing basis. Following a combination of detailed audience targeting and this simple process, we generated a 73% uplift in on-site conversion rate and a 45% reduction in cost per lead for a leading UK health insurance broker. So one of the problems you might be coming up against is the requirement to eliminate human interaction from the process and gather all the necessary user information via detailed website forms. Now, I'm going to say that there is a balance to be struck between hitting the conversion rate target you need and gathering enough customer information. We have seen this as an issue for insurers time and time again. Conversion boost could be something as simple as taking the phone number requirement from the first page of the form. You know, the less the user has to fill in the initial stages, the less commitment they feel and the better it is and the higher your conversion rate is. And here are a few other conversion rate wins we've seen in your sector. Ensure the data input and postcode lookup functionalities are as intuitive as possible, especially on mobile. You know, we often see frustrated clicks all over the place or people refreshing the pages on mobiles when they're trying to navigate these features. Large buttons on forms and finger-click friendly navigation are particularly useful on mobile and help the user to navigate through your forms with ease. Improve your site speed. Now, I'm sure you've all heard of this time and time again, improve your site speed. But those who are held back by legacy tech often provide a slower experience for the user, which is going to inevitably lead into them dropping out of the funnel. 47% of consumers expect a web page to load in 2 seconds or less, and 40% of these users will wait no more than 3 seconds before abandoning the site. This is often an issue on mobile for insurers. Speaking of which, mobile optimization is incredibly important. The relentless growth of mobile use means out-of-date websites have become liabilities. Google has prioritized mobile-first results delivery, meaning that those on page 1 of Google will be the cream of the mobile optimized crop, as it were. A seamless mobile experience is very important for Google Ads campaign optimization. Google uses metrics about users' on-page behavior to judge the quality of the content provided. A poor experience translates to poor quality score, meaning ads will be shown in search results less regularly. This limits the potential returns from what is by far the most profitable route to growth for insurance businesses online, using paid search to get your product in front of users who are already in a transaction mindset. So, in summary, take a full funnel approach to marketing and track where your most profitable customers are coming from. Use the 80-20 approach when optimizing your digital marketing activity. Find out where those most profitable guys are coming from and invest more optimization, resource, and everything else you can muster into that 20%. Utilize the detailed audience retargeting available to reach more profitable customers. Ensure your messaging resonates with your target audience and addresses their questions and pain points in as few steps as possible. Implement a remarketing strategy to stay front of mind with your customers in a positive way, and of course, use it to maximize lifetime value. Tell your users what products will be available and relevant to them in the future and get them thinking about that early on. Find a balance between hitting the on-site conversion rate target you need and gathering enough user information. And of course, prioritize ongoing conversion rate optimization in UX, especially on mobile. So I hope that all listeners got something of value from the 3 issues that I've addressed today, and I'll be happy to answer any questions and you can contact me later via the details in this slide. Thank you very much. Back to David.
Brilliant. Thank you very much, Rachel. Yeah, very insightful and some great actions there for people to take away. And so before we sign off and give people back some time, we've got some questions for you both. So Antonio, first one for you. Opening our business up to genuine customer feedback is a bit daunting. How important is it to recognise and respond to positive feedback just as much as negative feedback?
It's a really good one, because I think, again, that idea of if you're using feedback, you want to know what people's experiences were, but because it's your business, you will be protective of what people say. So you're likely to want to just jump on that feedback that is negative to try and mitigate any fallout from that experience. But I think, as any consumer would agree, I'm sure there's people here in this scenario as well. If you're leaving feedback, actually, if somebody has come back to you and you've responded, you've said that you've had a positive experience and they've thanked you for that feedback and that it's helped to improve their business, it really shows that even if there's nothing that's gone wrong with your experience and that it's been seamless, that the business is still grateful for the time that you've taken in leaving that feedback, because it shows that what they're doing is working well. And it's that idea of, if that comes back to you personally and lands in your inbox to say X insurer has responded to your feedback, it's just that idea of personalization again. I think that's really useful, because it shows that somebody somewhere within that business has taken the time to read what you have said to them and respond, regardless of how big they are, if they're a small broker right the way up to a major multinational. So that idea of going to positive and negative, I think, is definitely beneficial. Also, purely from a practical perspective, if you are just responding to the negative feedback, it may also just highlight that idea that, again, you're only focused on the negative, so people will gravitate towards that. In terms of SEO, if you're only responding to that, it can potentially drive up that negative feedback higher in search rankings, because there's more content around it. So we tend to recommend the idea of, where possible, responding to 3 positive reviews or responses to 1 negative to mitigate that. But yeah, if you have the time, I'd highly recommend responding to both, because it just helps broaden that balance out. And actually, it could be that one response that helps keep that customer or recommend you to somebody else, again, because you took the time to do so.
Brilliant. Thanks very much. Detailed answer there. And Rachel, we've got a question for you here. Which marketing channel is the most successful in the insurance space?
Good question. Probably Google search. So users are researching and comparing products when they're searching on Google, and they're often in a transactional mindset. You know, conversion rates are considerably higher from Google search and Microsoft ads as well, in comparison to the other channels. And as I mentioned, remarketing is also a great way to sort of mop up any users that have dropped out of your funnel. And this can be implemented on Google, Microsoft ads, and multiple social channels, like I said earlier in the presentation. Hope that helps.
Brilliant. Thank you very much. Antonio, final question for you. How can an insurer start to use user-generated content, such as reviews, to quickly improve digital experience for customers?
It's a good question. I think that idea of, if it sort of follows that analogy, if you don't ask, you don't get. If you're just asking somebody, how was your experience, 9 times out of 10, and I've seen it even with Feefo clients across the board, you'll get people who'd say excellent or good. It might be 1-word answers, maybe a sentence at a push. If you're really specific in what you're looking for, because you genuinely want to improve your business, rather than seeing feedback purely as a marketing tool, ask that information of the customer. If you've just implemented something into your business and you want to know that it's working, ask the question. So if it's a recent part of your purchasing journey online, or you've just launched a new website, you could say, we'd love to hear your feedback on your experience. You may have seen we've just changed our website, and we'd love to get your thoughts. It gives the customer a bit of stimulus in what to talk about, because for all intents and purposes, we don't always necessarily know what somebody's asking of us. So if you can give the customer a bit of guidance, then do so. In terms of other forms of UGC, again, just give those sort of prompts. So within Feefo, we do actively show that customers have the option to upload media content. If you want people to be sending that sort of thing, ask them to do so. So if it's a pet insurer or somebody doing bike insurance, ask for people to show pictures of you doing a triathlon or your bike on out with a ride with friends or on a dog walk or whatever it might be. And that idea of just, again, nudging the customer where possible to get the sort of information you're looking for, I think really pays dividends. So don't hold back. If you want that sort of information, then ask for it.
Awesome. Thank you very much. And Rachel, a final question for you. How long does it normally take to do the full funnel approach that you spoke about?
Well, it's a long-term strategy. So for a startup, for example, they struggle to reap the rewards of this approach straight away because data will need to build up over time. And of course, you also need to make sure that even in step one of the early stages, as I said, everything needs to be tracked, attributed, and set up properly. But sort of to find out which keywords and ads are leading to your highest lifetime value customers, I think I'd normally recommend analysing at least, a couple of years worth of data, but, for the insurance sector, possibly more if you've got it, because you want to stay, front of mind for each stage of their journey in life and be analysing each one of those data points. Again, hope that helps.
Brilliant. Fantastic. Well, that's all we have time for, folks. Thank you so much for joining, and don't forget to send any unanswered questions or further questions, for that matter, over to Antonio and Rachel. I hope you've all managed to take something actionable away and have gained some insight into how the future is going to shape up for marketing and CX in insurance. Please don't forget to link up with any and all of us on LinkedIn, and see you next time. Bye.
Thanks very much.